Alright guys, hello, I'm JD and I'm gonna talk about exercise 1013. You'll find it in week 11 homework chapter 10 part 2. Okay, so here we have a partial balance sheet. So as we know, this is a snapshot of the financial status of a company. So we will choose December 31st, 2017 as it says here. All right. This is about current liabilities. All the things we have here: accounts payable, notes payable. Well, it is about liabilities. The first two are current, then you find long-term liabilities. So this is going to be a partial balance sheet of liabilities. All right, let's start with current liabilities. I prepared a spreadsheet here in Excel so we can do things easier. We have following current liabilities: accounts payable, notes payable, but in Wileyplus we are taught that notes payable go first, then accounts payable, then an earned rent revenue, that's also a current liability, then FICA taxes payable, interest payable, income taxes payable. Well, actually, interest payable goes first, and then comes FICA taxes payable. All right, and then income taxes payable, sales taxes payable, and we're gonna calculate total current liabilities, and then we're gonna work with long-term liabilities. So let's start with current liabilities. Notes payable, I already put the numbers here. I'm just checking now so you can take a look at them. Notes payable, $42,000. Then accounts payable, 329,700. Okay, here there's a mistake. Sorry. I'm glad I'm checking this now. Remember to check this when you're to check up your information when you're preparing your own spreadsheet. And earned rent revenue, 504,000. All right, that's good. And interest payable, 84,000. FICA taxes, sorry for that, it's misspelled, 16,380. All right, that's good. And income taxes payable is $7,350. Sales taxes payable, $3,570. All right, so here we're gonna add this up. We're gonna assume these numbers from B3 to B9, and we got $987,000. All right, and then we're gonna work with long-term liabilities. We have bonds payable first, and I'm gonna bring these numbers here. So, all right, forget this. I'm gonna do that at the end. So we're gonna work with bonds payable, and the amount is $1,890,000, as it says here. All right, less discounted bonds payable. When we have discounts on bonds payable, it is supposed that we reduce the amount of bonds payable. So we reduce that amount by $86,100, and we get this amount, $1,803,900. Then we have notes payable June 2019. Since we're working with 2017, long term liabilities are beyond 1 year due. So in this case, we're gonna add notes payable. There's no additional entry here. I just put notes payable there. And actually, it helps a lot to check to the link to text. This button here helps me a lot. I work here, and in this document, it takes you to the document and and the section where you can find an example or something that may be helpful. And in this case, it says notes payable secured by planned assets, but you don't have that option here because you can show the list of accounts, and there you can see that there's no additional entry to notes payable. So I'm gonna just type notes payable, and that's it. Then we're gonna add this up and find total long-term liabilities and then total liabilities. Okay, so let's start typing numbers here. Notes payable is $14,000, $42,000. Accounts payable $329,700. I hope I don't miss anything. I wish you could help me here. You know, with a second look at this, and 84,000 to interest payable. FICA, it's 16,380. Income tax payable is 7,350, and sales tax payable is 3,570. All right. Total current liabilities stands for 987,000. All right. Bonds payable is 1,890,000. I'm just checking double checking. All right, 3 zeros, 4 zeros. Yeah, discount here is less, right? So 86. Okay, and 168,000 and total long-term liabilities. Okay, so how do we compute this? Remember, bonds payable are equals to bonds payable, initial bonds payable less discount on bonds payable, with a final amount of $1,803,900. All right, the next part is the notes payable. Here you're gonna add this up and you get this amount here, and that is total long-term liabilities. And I'm gonna copy this number in this section, and then we're gonna add total current liabilities with total long-term liabilities, which gives us total amount of $2,958,900, almost $3 million. All right, so I hope this is okay. Let's see. Yay, good job. So this is all. If you have any question, please let me know.